All right, let's dive right into this explainer. I'm going to be stepping in as your seasoned financial advisor today, and together we are going to completely demystify the relentless 24-hour cycle of the global Forex market. Now, if you've been studying the markets, you already know that foreign exchange doesn't sleep in the traditional sense. But what a lot of active participants miss is that the market absolutely has different moods, varying energy levels, and really distinct behavioral patterns depending entirely on what time of day it is. So today, we're going to unlock the actual mechanics behind those shifts. We'll be looking at the global clock, not just as a way to tell time, but as a seriously crucial instrument for risk management and strategic positioning. By the time we wrap up, you'll be viewing the 24-hour trading day through an entirely new, highly structured lens.
So here's our flight itinerary as we follow the sun across the globe today. We're going to start with the 24-hour timeline, break down the Sydney and Tokyo sessions, transition over to London and New York, highlight that super powerful overlap, and finally go over currency pairs and beginner mistakes. Okay, let's kick things off with Section 1, the 24-hour Forex market. You see, unlike a traditional centralized stock exchange that has a hard opening bell and a definitive closing bell, the foreign exchange market is this sprawling, decentralized, continuous network. The trading week actually kicks off in the evening Eastern Standard Time, right when the institutions in Sydney, Australia turn on their screens. A few hours later, Tokyo joins the fray as the night progresses in the Western Hemisphere. Then, as Asia begins to wind down, Europe wakes up, with London opening its doors in the very early morning hours of EST. And finally, the whole cycle completes its major phases when New York comes online in the morning. This sequential handoff of global capital from one time zone to the next, that is literally the heartbeat of currency valuation.
Moving right along to Section 2, Sydney and Tokyo sessions.
Now, there's a pretty stark contrast to be aware of here. The Sydney and Tokyo sessions are typically way quieter than the Western markets. Institutional volume is much lighter, which means tighter trading ranges and far less explosive price movements. Honestly, some novice traders get really frustrated here because they're looking for massive breakouts, which is kind of like expecting a hurricane in a gentle breeze, right? But as an advisor, I always remind my clients that lower volatility absolutely doesn't mean zero opportunity. It just dictates that you need a much more patient, precision-based approach. You're often going to be focusing on range-bound setups and really respecting established support and resistance levels because they're just less likely to be violently broken during these hours.
So knowing exactly what to trade when is absolutely crucial. Here are some real trade scenarios for you. If you're active during the Sydney Open, you want to focus your capital exactly where regional news happens. For example, a late-night Australian mining export report makes the AUD-USD pair a prime candidate. Then, as Tokyo comes fully online, maybe the Bank of Japan issues an interest rate statement, putting the USD JPY front and center for moderate, predictable volatility. Basically, it's a huge fundamental error to try and force a major move on a strictly European pair when the European institutions are fast asleep. Always align your assets with the hemisphere that's actually awake.
All right, let's transition to Section 3, London and New York sessions.
Now, as London and New York wake up, trading activity just absolutely surges. London is historically the undisputed heavyweight champion of the Forex world. It handles a massive percentage of all global daily transactions. So when London opens, volatility spikes big time. Just imagine a major European bank executing a massive cross-border corporate acquisition. That instantly translates to deep liquidity and tight spreads on the Euro-USD. And then New York enters the chat. The addition of the U.S. economic engine means anything tied to the U.S. dollar is going to experience super high volatility, driven by major economic data releases, corporate hedging, and massive speculative flows. If you're a trend follower or a momentum trader, this is exactly where you thrive.
Which brings us to the climax of our timeline, Section 4, the powerful London-New York overlap.
Okay, let's really zoom in here, because this overlap is where the true massive volume of global currency exchange actually happens. For roughly 4 hours every single day, depending on daylight saving time of course, the afternoon in London perfectly coincides with the morning in New York. So you literally have the two largest financial centers in the world operating at full capacity, processing billions of dollars in real time. Guys, this isn't just a slight increase in activity, it's a profound multiplication of market participants. Institutional banks, hedge funds, retail traders, and multinational corporations are all executing orders simultaneously. This creates a dense, highly fluid market environment where execution speeds are lightning fast, spreads are at their absolute narrowest, and price action is wildly decisive.
As your advisor, I simply can't stress enough how critical it is to recognize this volatility spike.
Visualizing this progression, we step up from the manageable baseline of the Asian sessions to the elevated volume of a single active Western session. But that towering maximum spike you get when both are active, that's the overlap. That is the prime time window for active day traders. The incredible liquidity means that major macroeconomic trends for the entire day are frequently established right inside these 4 hours. But be careful, because this high volatility is definitely a double-edged sword. That massive influx of capital means rapid price swings. Sure, it can hit your profit targets quickly, but it can trigger your stop losses just as fast if you're caught on the wrong side of the momentum.
Finally, let's cover Section 5, Currency Pairs and Beginner Mistakes.
Understanding the clock is only half the battle. Avoiding these common beginner mistakes is what actually protects your capital. I see this literally all the time. A trader tries to trade a complex British pound crosspair during the absolute quietest hours of the Tokyo session, wonders why the spread is terribly wide, and then gets entirely chopped up by erratic low-volume price movements. Another huge pitfall is miscalculating the sheer force of that overlap we just talked about. I mean, if you enter a trade 5 minutes before the New York Open without factoring in that incoming tidal wave of volatility, you're essentially standing on the train tracks just hoping the train slows down. You have to avoid chasing hype. Instead, build a structured routine that deeply respects the biological clock of the global economy.
I really want to pause on this for a second, because trust and realism are vital here. Navigating this extremely dynamic market requires strict discipline, not gambling. I cannot emphasize this enough. Everything we've mapped out today regarding market sessions, volatility spikes, and liquidity overlaps, that gives you a fantastic structural edge, but there are absolutely no promised profits or guaranteed returns here. Utilizing session timing without robust risk management, like strict position sizing and the unwavering use of stop-loss orders, is just a recipe for capital destruction. Let the structure of the 24-hour cycle guide your entries and exits for sure, but let risk management be the unbreakable foundation that keeps you in the game long-term.
So let me ask you, which global market session best aligns with your personal trading strategy? As we start wrapping up this explainer, I want you to look inward and really ask yourself how this timeline fits into your own daily routine. The absolute beauty of a decentralized 24-hour market is its unparalleled flexibility, but you've got to choose your battles wisely. If you work a traditional full-time job during the day in the Americas, well, maybe the Asian session aligns perfectly with your evening schedule. That means focusing on patient, range-bound strategies with the yen or the Aussie dollar. If you have your mornings entirely free, that London-New York overlap offers that incredible high-octane momentum environment. Your strategy has to be in perfect harmony, not just with the market's clock, but with your own biological clock and psychological comfort zone.
Navigating global finance is an ongoing journey of education, adaptation, and discipline. You now understand the biological clock of the global economy. So the real question is, when the bell rings in London tomorrow morning, are you going to be a spectator caught totally off guard or a strategist ready to execute? If you're ready to stay ahead of the curve with trustworthy, highly structured insights, make sure you subscribe to the Forex Alert today. Keep refining your edge, always respect the volatility of the market, and I really look forward to guiding you through our next deep dive. See you then.